Welcome back to another episode of 5 Minute DD. Today we're talking about ticker OLP. This is One Liberty Properties, and it's a ticker that I haven't heard a lot about. It's not very popular on social media, but I think there could be some potential here. If you guys are new to my channel, this is where I do 5 Minute DD. I give you a bunch of information in 5 minutes. Typically it goes a little long, but we'll try and make it under that 5 minute mark. I do a bunch of research and let people know what I would want to know about a stock, about its dividend, about everything before I was to purchase it. Now, this is not financial advice. I always recommend you guys do your own DD on these things. This is kind of just to get your foot in the door to see if you are interested in a company. So, OLP. We're going to start with the pros. As always, if you guys like this video, please like it down below. Drop a comment if you want me to do a 5 Minute DD video on a stock of your choice. I love doing viewer requested stuff. And subscribe if you're interested. So, let's jump right back into it. Pros, 8.15 dividend yield. Now, a very good dividend yield. It has gone up quite a bit because, as we can see, this year has not been great for the price appreciation, down 21%, and that's mostly the only reason why the dividend yield has increased. But if you like this company and you believe in it long term, you see potential in it long term, that's a really good buying point down here with a low of 21. And if we jump to their 5-year chart, we can see that they were at about $35 after the pandemic crash and run, and since then have sold off. But the max chart is sitting okay at about 49% all time. Now, I say it's okay because this thing has been trading publicly since 1983, so that's not a lot of price appreciation over that time span. You're talking a very long time for about 50%. Still, there's some pros to this, so that's not the main reason why anyone would buy this stock. In my opinion, you would buy it for the dividend as well, but price appreciation is nice, and we've seen they've had a bit of a rocky history in the short term. They're very diversified across the U.S. Now, we can pull up their investor presentation. I will have this link down below for you guys to look at the whole thing if you're interested. Now, they have only 121 properties, a little bit small. And that also is in correspondence to their market cap being only sub 500 million. Now, that is pretty small, especially when you're looking at a dividend stock. Typically, you like a safer, larger market cap for a dividend stock. But still, this one, I think there's some bearings to at least look at it and see if you're interested. So the main portion of their properties are in industrial and retail, a good chunk of them. They also have some restaurants. I do not like restaurants and theater. I think that's extremely high risk, but you can see the capital in there is not nearly as much as the industrial sector, which is okay. Now, diversification, they're all over. This, I think, is great. If you have a storm that hits the East Coast, they still have some profit generating from the West Coast, vice versa. If something hits, southern around Texas, Florida area, you still have a bit. Now, they are definitely clumped on the East Coast with only a few properties in the West Coast, but it's not terrible for diversification in 31 states. We can see the bulk of their properties on the East Coast are in a little bit, I wouldn't say nicer areas, but probably higher cost of living areas. Thus, you have, with restaurants and theaters, that could be a bonus. There's a number of things you guys can look through. It shows their diversified tenant base, which is true. They have the market cap as being higher. This is from, I think, April of 2022, and that's why. And then we have the 22.8% insider ownership. That's pretty great, in my opinion, especially when you're looking at a smaller company. So if the insider ownership was like 2 or 3%, that would have me a little bit worried, but you know that they at least believe in themselves to an extent to put that much money into it and to hold it. So that is good. You can see that the low 6% dividend yield as well. So jumping back over to the chart, this last little dip there, it could go back to that high, but I think we're looking at trading sideways for quite a while, meaning that the dividend will be a nice payout. Now, the lease maturity profile, that's one really important thing that we need to talk about. That was included in this mortgage debt maturity. So as you can see, this is where it gets a little bit scary, in my opinion. They have about a little over 1 million of expiring leases in 2022. They'd had 2023, they have 10 million. So it is a lot. If they were to, worst case scenario, they lose all this, it would be a really big chunk of their lease revenue all happening in 2023. And I think this is really important that 2023 will be a big year for them. We can see how many of the leases renew their contracts, how much money they continue to make in 2023 from their leases, and that will be pretty telling. And then all the way until 2027 is when their next large portion of the lease money will be up for renewal or not. So you do have a bit of a gap between those times. So if it does do well in 2023, I expect 2024, 2025, and 26 to do relatively well. And then 27 is another big year for them. Now, that is important to note. If they were to do poorly, that would reflect very negatively on the company for the short term, and could result in even farther falling of that 21% dip that we've seen. They have extremely stable occupancy in the 90% range. So high 90s, 96.8 is the lowest rate. And this goes all the way back to 2012. And they did drop a little bit 2019, 2020, a bad time in the market, and seem to be coming back up a little bit, which is important. So I really do like their investor presentation. There's tons of stuff in here, and I wanted everyone to see that. There's some important stuff in there, and I think if you ever want to do research on a company, you should check that out immediately. Now, looking at their dividend history, I always like to throw this portion in. I use NASDAQ.com. You can come on here and look at the full dividend history. You can also use TipRanks. I've used them as well to double check. So this is one of the negatives. It is in the cons, that small dividend growth. We can see that they haven't cut their dividend for a while. They've been consistently growing it, which is nice, but they stopped growing it in 2017, and we've continued to see the same amount paid out since then. So not a lot of dividend growth in the recent history, but again, it is a little bit more speculative of a dividend stock. So there is a reason that people do purchase this. Your chances of that dividend growth re-upping, you can't really say, but they did have a lot of dividend growth, and so it would be a negative sign. They did cut it in 2008 was their last dividend cut, and they do pay quarterly, which I don't love. It's okay, though. I wouldn't rule a stock out just because they pay quarterly, but a dividend cut from 2008 definitely is one of the highlights of their dividend history, but that not growing their dividend this past couple, 5 years, is definitely a downside, in my opinion. I like companies that are growing their dividend consistently and have good price appreciation. So steady rental income, this portion of the chart I pulled right over here because it is really important to see how much their rental income has increased. So we go back to 2015, only 62.8 million, and their peak was about 83 million, and they're still sitting at about 82.2 million. So just barely off the highs. And when it comes to rental income, the higher the better at all times. It's not like a chart where, you don't want to buy at the high. You want this portion to be high at all points if it can be. It is a good sign for the company. And so this was one thing that I'll say, hey, it stands out as being definitely a positive to the company. And if they can continue to move this chart upward, which they did over this time span, it's nice to see that you will end up likely doing better price appreciation wise and with the dividend. So now let's jump into the cons. I don't want to give you guys false hope with this stock. It is definitely higher risk, and it is not very well known. So it's a smaller market cap. That's one thing that if you're investing for 30 years, a larger market cap right off the bat always gives the idea of it being safer, and typically it is. And if they have more capital, they're typically able to make more capital. So growth is a factor with this stock. Low number of properties. That one is very interesting. The number of properties as well as the total, what their property is, the fact that it is partially restaurants and theaters, even though it's a small portion, is a negative side to me, as well as residential type things. Not terrible, not great. Definitely something to take note of if you're comparing this stock to another one. That would increase the risk, and dividend growth, which I talked about. So that's the whole video wrapped up. I kept it around 8 minutes, so I'm not even close to 5 minutes, but I hope you guys found some value in this video. Let me know in the comments below if you did, what more you want to know about this company, if you're willing to buy this company, and a stock you'd like me to do a 5-minute DD video on. I appreciate you guys for watching. If you could like, comment, subscribe, that helps me out a ton, and I'll see you guys in the next one.